I quit my CDL trucking job to pursue trading full time. It's been 5 months. In this video, I'm going to give you an update, but first, we have to discuss the S&P 500, the overall market, where I think it could go, and how to my plan to basically trade it moving forward into the future. So in my last video, I can't talk right now. In my last video, I described this channel right here and the level of 680 as resistance, right? Or potential support. And I knew that we would get to 680. And here we are at 680, this key level. So as you can see, there is a wick right here. The wick, this is a candlestick chart, right? And so this wick, this wick is a rejection of this level. So price closed below 680, which is very, very interesting. Not only did price close below 680, but it respected the resistance level, the top tier resistance level of this channel. And I misspoke when I said that whether price is in a box or a channel, it trades in trend. What I meant to say in my last video is that price will trade within a channel. If it's in a box or like for instance right here, like price is within this box, the lower box, the top box, price will remain within that box until it breaks above it. And when it's in a channel is basically a diagonal box. So you see this channel and price is basically respecting this channel as the box until it breaks above or below. Now this right here broke below, like you see these wicks on these candles. This is price respecting this channel from this low. It starts from up here, down here, right there. These are the 3 points that creates this channel. And price is respecting this channel, this diagonal box. So yesterday, the day before Thanksgiving, and happy Thanksgiving, by the way. Today is at the time of this recording, it is Thursday, November 27 at 8:28 a.m. Happy Thanksgiving. So yesterday, which is Wednesday, the last day before the market, before this holiday, price gapped up from previous close, broke above the resistance level of this channel, this line, and then closed below it, respected it. Now, moving forward, because of this channel right here, because of this, we would price respecting this resistance. It's easy to assume that, oh yeah, we're just gonna go down and retest the bottom end of this channel. We could very well do that. Here's why I don't believe that we might just do that on Friday, where the market should be open again. It's Black Friday, and the market will be open. I don't know for how long. I don't know if it's a full day or whatnot, but ultimately, Friday is not the key determining factor if we continue to bullish territories or we sink down to the lows. What would be the determining factor? Monday. Let me show you something. Monday. I'm on Forex Factory. I hit next week. First it's the news calendar. Hit next week, and this is the dates of upcoming dates for next week. This day right here, Monday, December 1st, Fed Chair Powell speaks. Fed Chair Powell is, by his words and his actions alone, will move the market. And so when we go back to this level right here, this key point of resistance, I believe that price on Friday is going to end on Monday, because Fed Chair Powell speaks at 8 p.m. So Friday and Monday's price action is likely to be choppy, because everyone is going to hang on the words of Jerome Powell. What is he going to say? What is he going to describe his plans, his monetary plans moving forward? And so price, I believe, is just going to chop around this key level, 680. There's going to be a lot of wick action. Like you see how 680, this yellow dash line, price is just lingering around. I believe that price will do that within Friday and Monday. But at 8 p.m., this is where it could be very dangerous for people who hold positions overnight, like swing traders or position traders. Dollar cost averagers, they're just going to buy mindlessly regardless. So they're not really concerned. But if you're a position trader, a swing trader, and you're going to hold overnight, 8 p.m. after the market close, this man is going to say things that is going to radically alter the market. And after this particular day, if price remains above 680, we're going to break these all-time highs. This is my opinion. Trading is risky. Consult with a financial advisor. This video is for entertainment and educational purposes only. But in my opinion, I believe that whatever Jerome Powell says, it will create massive volatility, and to the upside or to the downside. But we are at a key point of inflection in the marketplace. So be very, very careful in entering new long positions. Don't assume that we're just going to go straight down. This is me thinking out loud to myself. I'm not going to assume that the market is just going to crash. I'm also not going to assume that the market is going to spike up. Let me show you what the power of Jerome Powell. December 18, 2024. Avert your eyes up here. This is December 18. You see, December 18, 2024, Jerome Powell spoke. And in that same day, the market moved about 200 points in less than 2 hours. The very end of that day, it moved straight down, knocking out a lot of stops, knocking out a lot of longs by his words alone. And that was the first day in 2024 that marked volatility, because in 2024, we was in a super bullish trend. And then from that point on, the market was chopping. And then when February rolled around, 2025, straight downtrend until President Donald Trump, paused tariffs. And look at this reversal Marubozu bar. So we get this big candle right here. And when I scale my chart, it neglects the magnitude of a move, or it negates the magnitude of a move. Believe me, this is a huge move. And this move right here was the biggest move of the year, or one of the biggest moves of the year. Like all these other candles, you see how tight and small they are compared to this move? So the magnitude of this move is lost when I scale, because as I'm scaling, this chart has to account for all of these levels. So it makes this seem like this wasn't a big deal with Jerome Powell, but this was a massive deal. From 2 p.m. to 4 p.m., 2 hours, price did this. Just puked straight down. And this was December. And this is going to be December of 2025. Jerome Powell at 8 p.m. is going to speak. The other thing, so this is the official Federal Reserve website, federalreserve.gov. And this is the statement here that that is highlighted. That I'm not even going to read. I'm not that good of a reader, but this key thing right here, aggregate securities, this last sentence, it says, the committee decided to conclude the reduction of its aggregate securities holdings on December 1st. That means they're going to stop quantitative tightening. And how do I know this? I used basically Google Gemini to, hey, what the heck we're going to conclude the reduction of aggregate security. What does that even mean? Is that all it means is like, they're easing up on their monetary policy. They're basically going neutral. And it's not them turning on the money printer, but it's also not them trying to actively restrict the economy by higher interest rates or whatnot. And so most people, I remember last year, when Jerome Powell finally made his first rate cut, everyone assumed, oh, we're back in 2021 territory. We're going to go straight up, because the moment they lower interest rates, the stock market is going to skyrocket. No, not necessarily, because interest rates and turning on the money printer, meaning quantitative easing, is different. These are two separate different things. And I saw a lot of content where content creators conflated the two. They confused the two. They assumed lower interest rates mean the money printer's on, and the money printer is still not on. It's just so quantitative tightening means it's anti-money printer. All they're saying is like, hey, we're gonna stop anti-money printing. And so whatever is said, whatever is discussed, be very weary of December 8th. I'm sorry, December 1st at 8 p.m. I wouldn't open, like me personally, I'm not going to open any swing trading positions until after that day, because Tuesday morning, price could literally gap down here and trapping all of these longs, which it would it would hurt a lot of people who think, oh yeah, we're just going to keep going up. You see this quick little uptrend, we can just keep going up. And Jerome Powell could be like, yeah, we're not doing quantitative tightening anymore. But Jerome Powell could be like, I really think the economy is like struggling a little bit. Whatever he decides to say. He might say something that if the market perceives that he's like, yeah, we're not doing this, but y'all are still screwed. We wake up on Tuesday and the price is down here somewhere. Or he could be like, yeah, we're easing. We're not doing quantitative tightening anymore. And I think the market is great. We pop up here above highs. Who knows? But ultimately, and it's crazy that it's at 8 p.m. Like, why at 8 p.m., right? And this is my take on doing any type of swing trading. I hope you found value in that. If you did, please like and subscribe. And let me know your thoughts in the comment section. I'm free flowing. Don't really have a script. Just going off of my analysis of what I think the market is about to do, because we are at a key inflection point. And who knows? Like, are we gonna sell off or go back up? Tuesday morning is when I like, if I do any type of swing trading, which I won't. I haven't been doing swing trading. That's when I would do a swing trade, because if Jerome Powell is out the way, everything else is, it's like, oh, Friday core PCE, that's a mover as well. Wednesday, I put more emphasis on Friday, but that's the biggest market mover. Now, for my trading, so let me show you my trading account. It's been 5 months. I took this over the last few days. I had been trading Google, and I took two, maybe more than two, like 3 or 4 back-to-back losses on Google on different days, like multiple different days. And for my account size and for the option contracts on Google, it hurt. And in my last video, I think my account was at like 600 something bucks. And then yesterday, Wednesday, I withdrew $100 from my trading account. Oh, the thought just occurred to me. I need to add a screenshot. So I'm going to add a screenshot. So I withdrew $100 in my trading account. So my account was at like 500 bucks. And yesterday, I made 192 bucks for the day. It's like basically a little under $200 after withdrawing out $100. This is where my account sits. And so, like, if you pay attention to my account size and how my trading is going, like, I'm lingering around like this little $1,000 level, because I pull money out of my trading account on top of gains and losses. And so, if these numbers don't immediately add up or make sense, like I'm acting like I may have wins and my account still draws down because I manufacture the drawdown by removing money to eat because I don't have a job, I don't have any income to like traditional income in the form of a W-2 in order to sustain myself. So before Thanksgiving, I had to go buy some things like toilet paper or whatnot. I was low on supply, so I pulled $100 out, but I made, I think like $200 or something, like less than $200. And so this is where my account is, and I'm in a situation once I vacate my property, like wherever I'm living at, and move into a room that my brother has so kindly offered me. A lot of my expenses is gonna go away, and I'm gonna be able to. Well, I'm going to strive to draw less money out of my trading account, and then I plan to get some type of part-time job on the weekends so that I can focus on my trading. And then the job, I believe, will enable me to basically keep up with my life, my lower expense life, without having to pull money out of my trading account on a consistent basis. And that hurts a lot, in addition to incurring losses. And one thing, as a trader, if you decide to trade full-time, and trading is risky, I have to add that disclaimer, consistency is not making money every day. And this is important. I hope you really listen in very, very close to what I'm about to say next. If you are a trader, you have to adopt a 1099 mindset, not a W-2 mindset. Because if you adopt a W-2 mindset, employees, they sleep at night while business owners and managers stress about payroll. Business owners and business managers, CEOs, especially in upstart or within a shaky business, they stress about making payroll. But the employees, they expect the consistency, right? Oh, I did some work, give me money. But business is not like a W-2 job. Companies report earnings, right? And there's earnings misses and earning beats. Let me show you Amazon or Netflix. Thinkorswim be tweaking, bruh. Let me get all of this out of the way. So companies miss earnings. You see down here, these are earnings reports. And for the very best businesses in the world, they still miss on earnings. Was this a miss for Netflix? Yeah, you see, analysts estimated that Netflix would make $6.88 per share. Netflix reported $5.87 per share. Their stock cratered. The very best companies in the world still don't make money, profits, or revenue on a consistent enough basis. And so this is business. Trading is a business. And so how do you create the consistency as a full-time trader? You have to absorb your losses, because for trading, the equivalent of expenses is losses. So Netflix incurs losses, paying employees, etc. Or not, they incur losses, they incur expenses, and they have to balance their books in order to create the profit. So as a full-time trader, actually, let me explain this in a way a truck driver could understand. For you to move freight, you have to spend money, incur expenses to buy fuel. You have to pay your insurance, etc. All of these other things for you to move the freight. That is you incurring an expense, and you charge your customers more. At least I would hope so. More than it costs you to move the freight. More than it costs you for your expenses. And there are good times in trucking and bad times in trucking. Freight fluctuates up and down. Expenses might fluctuate up and down. But you create the little profitability by balancing over time. And so in my trading account, the uninformed will look at this, my P&L or my like, because I'm publicly sharing this, and they're like, because I've had comments, I've had emails from people like totally uninformed. They assume that, every single day it's supposed to be like a W-2 check. No, it is not. The consistency comes over time by balancing the books, where it's like, okay, I took losses on Google, but then the losses that I just incurred, I literally regained back a lion's share of it. And even though my account appears to be less than when it was, I'm also actively pulling money out of my trading account to, move around, put gas in my car, like, buy things for my son, diapers, clothes, etc. And so, but without it's been 5 months and I'm still at this level, or in mainly because of I've had a lot of expenses, so I'm cutting down on a lot of those, and so that's like a resistance, like bogging down my account. And once I lift that resistance, I believe up we go. We shall see though. And so ultimately what I'm saying is, if you decide to be a full-time trader, it's not about making money every single day like a W-2 check, because if that's your mindset coming into this, you are doomed. The mindset is the expectation of fluctuation in price. A fluctuation in your P&L. Some days you win some days you lose some. But the objective is to live to fight another day. And you win more than you lose over time, your account will just grow. And what you try to do is keep your expenses as low as possible. And your losses are the equivalent of a business incurring expenses. Taking a loss, like the losses that I incurred in Google, is the equivalent of like putting fuel in a truck, paying for insurance, etc. And when I pull money out of my trading account, it's the equivalent of me giving myself a W-2 check. And taxes is another big bill that stresses me out, but it is unavoidable. I will live it. Like, I'm working on it. So that's that. Where are you at in your journey as a truck driver? Do you trade as well? Real quick, I noticed that people mention about in the comments about switching over to futures. I have to add this about switching over to futures. I don't understand futures as well as I understand options. And because I'm not as informed, I deliberately choose not to really. I just have to educate myself a little bit more on futures. But I've tried to trade futures in the past, and it's just, I understand options deeply, intuitively, in a way most people they don't, because I've just been doing this for years, specifically trading options. So I understand the price movements. I understand all the Greeks, the first order Greeks, the second order Greeks. I understand. I'm never confused about which strike to choose, which expiration, how far out I need to go. You know what I'm saying? Excuse me. And so for me to just switch cold turkey, I'm afraid that I would lose more money doing that than doing this. So if you know futures a little bit better, you have video recommendations, let me know. Let me know in the comment section, or shoot me an email, and we'll discuss it. And you can maybe point me in the right direction. But if you're lagging in options, trust me, I know options. So happy Thanksgiving. This is my quick update. I'm free flowing. I'm not really in a script. I'm just trying to be more natural on, not necessarily camera, because I'm not on camera, but on the charts. Because I feel like, before in the past, I made content that was more scripted, and I planned out what I was going to say. And it's so much easier for me to put out content on a regular basis if I just freeform and just be myself and, ramble and wander a little bit. And it's not for everybody, but the people who it's for, they'll stick around and they'll support the channel. They'll watch the content. So that was Netflix. Or I'm sorry, not Netflix. That was my perspective, my update. And we're on SPY, the S&P 500 right here. Be very careful on thinking that price is going to shoot straight up. We're in an uptrend. We're going to sky highs, because it's not over yet. December 1st, Monday at 8 p.m., whatever Jerome Powell says, after he speaks, that's when, in my personal opinion, a swing trader or a position trader could be comfortable in longing or shorting overnight, because Friday's a wash, Monday's a wash, Tuesday is where it's at. Tuesday is going to be, we're either going to gap up or gap down Tuesday, because Jerome Powell is going to yap his trap. He's going to say something. He could be hawkish, he could be dovish, and that's going to send the market a certain way. And yeah, that's it. Happy trading, safe driving, happy Thanksgiving. Hope you eat well, feast well. I got a lot of work to do in packing up my house, and so I just did this video and I'm about to go pack. Till next time.